So roughly $72 billion divided by 4,000, because they've been buying since last week. I know it dropped below 3,900 yesterday, so I use 4,000 as an average. So it's quite simple. They've been able to accumulate 18 million troy ounces of gold. And in metric tons, that translates to 559.8 metric tons. So almost 560. So it's a huge amount. And there are other countries in BRICS that he told me about. One big country in South America, actually. Wednesday, October 29th, 2025, Monaco 64, home of alternative economics and contrarian views. Well, today we're going to look at how the world is fast moving towards a new monetary architecture. Yes, it sounds crazy because we don't hear that from the mainstream financial press in the West. We don't hear that from Wall Street economists, from the central bankers in the West. But it's all happening very quickly. Of course, you do hear it from me and others who cover the BRICS. What's going on there, how important it is. This new monetary architecture that has been led into existence by China especially, but also the other BRICS nations and a lot of countries in the global south, so to speak, countries that are not aligned to NATO or the West or the Anglo-American Empire, whatever you want to call it, the people who are hanging on to the dollar, right? the UK, instead of buying gold, we're up to here in U.S. Treasuries as reserves. Of course, there's a lot of recycling going on through places like the Cayman Islands. It's not really foreigners buying dollar there. It's just U.S.-based hedge funds putting on highly leveraged basis trades in the Treasury market. And even the Fed recently said they were shocked that there was 1.8 trillion of treasuries parked in the Cayman Islands, a little speck of land in the Caribbean. And there's a lot of the same thing going on here in the city of London. It's an offshore center in Luxembourg and in Belgium. But what I want to talk about today, and I usually don't have or don't talk about sources, but this is really explosive. And my source, who's a really good friend, and I can vouch for him 100%, and he has worked in the markets, in the bond markets. He has had these people that I'm going to talk about as clients in the past. He's retired now, my friend, but he maintains contact with them. And what he has told me in the last 10 days or so, since gold and silver started correcting, it is quite amazing. And it shows that the world is rushing towards maybe not completely abandoning the dollar, but they're definitely rushing towards an alternative to the dollar. And that alternative, of course, will have gold as the major reserve asset. We've seen already that foreign reserves of foreign central banks have surpassed the amount of treasuries they have already. But before I tell you the scoop that I've been getting, I'm gonna show you this Rudy's stainless steel water bottle, if you haven't seen it yet. And if you don't know, we have a merchandise store that was created by one of you, one of the viewers in the States. And the merchandise store is called the Rudy Collection. And it says premium merchandise featuring Monaco 64's beloved companion. So I'm having my electrolyte this morning in here. I also take it in the summer on the golf course. It keeps everything cold or hot. It's really good. There's a link below in the description to the Rudy collection merchandise store if you're interested. Anyway, back to my scoop, so to speak. Well, we know that gold and silver have corrected quite sharply. There's a lot of hate, propaganda, a lot of people coming out of the woodwork, not just in the crypto or Bitcoin sphere, but also mainstream economists. And yes, it's a psychological warfare. And I'm very familiar with psychological warfare in the gold or precious metals market. I've been telling you about this editorial from 2004 from the FT, which I thought was so outrageous that I thought it was even funny. I mean, at first I was kind of angry. So they wrote when gold was $400, right? And right now, as I speak here, we're almost back to 4,000. It's 39.92. So they wrote, going gold. The pointlessness of holding bullion continues to sink in. So this was April 2004. Of course, in the next 4 years, gold ended up trading to 1,000 by 2008. And then it went to 1,920 by 2011. So what I'm trying to tell you here is ignore all these naysayers. The fundamentals are quite explosive for gold, and not just the fundamentals, but this new monetary architecture will drive the price of gold a lot higher. And this is why we're seeing the problems in the LBMA, which is at the heart of keeping this paper game going. It's the heart of keeping people in the dollar system. And why is that? Well, because it's based on paper. But now these central banks that I'm going to tell you about, not just recently, but for the last few years, they're buying physical gold, not futures, not ETFs or any other paper promise. And this ruins the LBMA, COMEX, Axis game. And I venture to say that those two exchanges are going to be quite redundant in the next few years. They're not going to be important. So now to the scoop. Yes, very good friend of mine. We talk every day. And this friend of mine used to be a bond guy, and he still invests in bonds for him, his family, but he's gotten more and more into gold. I remember years ago telling him you need to buy physical because he had a position with a bullion bank, and I said that's not good. You can't trust him. So I'm glad he did that, and he's done well from that. But yeah, since gold started correcting last week, he's let me know, he's given me very good information of how central banks, BRICS central banks or Global South central banks are buying gold on this dip. And they're buying tens of billions of dollars worth. And I've done some calculations here. Also of the tonnage that they've been buying, and this has been over the last 10 days. And yesterday I spoke to him, and gold, of course, dropped below 3,900 yesterday. I saw that. I was on the golf course at the golf club, and I checked it briefly. And yeah, I think and silver even had a 45 handle. So I think yesterday was, and you never. It's a little bit tough to call a bottom, but if anything, if there's going to be a bottom, yesterday could have been it. We saw what people call a capitulation bottom, and if you look at this chart of silver here, we have a hammer candle that formed yesterday, and usually, not all the time, but usually that is a bullish sign. That's a sign that a market that has been going down has bottomed. That's the hammer candle, Japanese candlestick technical analysis. So yeah, I spoke to him, and he said these Middle Eastern central banks, and these are countries in the Gulf Cooperation group. You can probably imagine which ones they are. Big, powerful countries in the Middle East. Well, he told me they bought $44 billion of gold yesterday on that drop. And of course, that's not futures. It's real physical. So they're taking advantage of this drop to load up on gold. Not that they haven't been loading up since 2022, right? And last week, the same group of banks bought 27 to 28 billion. So roughly around $72 billion. Doesn't sound that much. I mean, the speculators on COMEX, LBMA trade that like nothing because it's paper, but this is physical. And I did the calculations here. So roughly $72 billion divided by 4,000, because they've been buying since last week. I know it dropped below 3,900 yesterday, so I use 4,000 as an average. So it's quite simple. They've been able to accumulate 18 million troy ounces of gold. And in metric tons, that translates to 559.8 metric tons. So almost 560. So it's a huge amount. And there are other countries in BRICS that he told me about. One big country in South America, actually, who started buying gold again this year. They've been active in this drop. Brazil, yes, they've been buying a lot as well. And yeah, this is a symptom of this new monetary architecture. They're going to need the gold to operate in this architecture. And I asked him, these Gulf countries, where are they storing their gold? Are they buying it in London and leaving it at the Bank of England? He said, no, they're putting it in their vaults. There's a new Shanghai Gold Exchange vault that's being built in Saudi Arabia. So that's where the gold's going to go. This is a brave new monetary world, actually. And I think America is going to get on board, to be honest. You might think they won't, but there's no alternative, because once these powerful countries move to gold, anything that's paper is going to be under pressure. And it's not surprising that Judy Shelton, who I mentioned yesterday, who wrote an article in the Wall Street Journal, or editorial a couple of days ago, mentioned gold revaluation. I think that's in the cards. And we saw after the election, U.S. election last year, that in December, a lot of gold started flowing to the United States. And I think the Americans know that BRICS are moving towards this system, and they're either repatriating a lot of their gold that they might have leased over the decades, or they're adding on to that 8,133 metric tons that they have. Yes, so I hope that many of you who have followed some of the things that I've said about gold, about having gold and silver over the years, have kept your gold and silver, and that many of you who have the wherewithal will get out of fiat currency into gold and silver, because you're going to be left holding the bag if you hold large amounts of fiat currency. And this is not financial advice, of course, this is my opinion. So I think this is huge. Of course, we're seeing a lot of like propaganda, a lot of trolls out there denigrating gold because it dropped 10%. That it's not a store of value anymore, even though gold on average has gone up 8 to 9% in dollar terms since Nixon closed the gold window every year, right? Since the beginning of this century, for example, in pound sterling, gold's gone up on average about 10% a year. So the reason we get these sharp moves in gold is because we have a speculative market that was created on COMEX in January 1st, 1975, together with the LBMA. They worked together to keep it a speculative market. For example, I played with a guy yesterday, golf. I hadn't met him before, really nice young guy. After the game, we had a drink and we were talking, and started talking about gold. And the first thing he said to me, wow, gold has gone down 9%. you know, so the public is being like pushed away from gold because they don't want you in gold. They want you poor and dependent on them. So what I'm trying to say here, there is Wikipedia leaks from 1974 before gold was made legal in the US, and I'm gonna put a link to it below in the description, where the US authorities contacted the London bullion dealers, asking them what they should do to keep Americans from buying physical. And they said, well, the fact that you're gonna create a futures market is great because you can keep it very speculative and volatile, and most people won't want the physical. So that's what the game is all about. And if you don't have physical, as I said, you're going to be left holding the bag. So just want to talk about a post I saw here from Gary Bohm. Gary Bohm is founder and host of Metals and Miners YouTube podcasts. I follow him on X. He follows me. He posted this yesterday, and I quote, "There has been a minus 10% plus drop in gold over the last 6 trading days. There have been 10 similar instances in the last 40 plus years. In all 10 of the prior instances since 1981, gold rallied over the next 2 months. The average gain was a staggering 8.9% with a 100% success rate." So am I saying we've bottomed and we're going to rally at least 8.9%? No, but the probability is very good. And one thing I would add, this is since 1981. Maybe prior to 1981 it wasn't the case, but I think that's a really good piece of information that Gary Bohm provided there. What else? Oh yeah, talking about central banks moving into gold. Well, we've got a central bank here that is more allied to the United States, to the West, that is starting to buy gold again. Yes, the Bank of Korea, South Korea's central bank. And this is from the analyst at the, World Gold Council, Krishan Gopal. I've referenced him before. And he posted, the Bank of Korea intends to consider increasing its gold reserves. The bank held 104 tons at the end of July, latest available data, accounting for just under 3% of its total reserves. So it's only a matter of time until some of the European central banks, Western European central banks, might start buying gold, but I'm not holding my breath. Maybe the Bank of England or the UK Treasury. I wouldn't hold my breath that Rachel Reeves would think buying gold would be a good thing, because she's totally clueless, of course. Anyway, let's quickly look at the markets here. It's 7:45 a.m. London time, and we are only 4 hours ahead now of Eastern time in the US. And that's until this weekend because you guys move your clocks back over the weekend. Yes, the stock market continues to melt up. Of course, in gold terms, it's not the same story, right? And I think a lot of people are expecting some kind of correction in the stock market, but I don't know if the melt up will stop. And of course, today we've got the Fed decision on rates. I think they'll definitely cut. What will be important is to listen to Mr. Powell's, Chairman Powell's press conference, and also some of their forecasts. So it's going to be a big day for the markets. Right now we've got gold at $39.93. That's up 41 bucks. High's been $39.99. The low $39.14. So we're up 1%. Silver is trading just around 48, and this is all spot price, not futures. It's up about a buck or 2%. High has been 48.06. The Dow futures down slightly. S&P is down 0.25%, so we're above 6,900. NASDAQ 100 as well is doing well. It's up 0.5%. In terms of the currencies, I see that the pound is fairly weak. It's down 0.33% at 132.25. The euro and the yen are virtually unchanged. And the treasury market, treasury yields, they seem to be pretty steady right now. The 10 years hovering around just below 4%. And the 30 years at 4.54. With that, I'm going to wish you all a very good day. Take care. Bye.